How can an investor use short selling to make money, especially in stocks that you feel are way overpriced? That's what I hope to answer in this video. We've seen the stock market really go up for about a year and a half, and it's been great to see stock prices go up. But in the process of finding companies that are good investments, companies that are growing, generating free cash, and overall are discounted, you oftentimes find companies that are the opposite. They are seeing their fundamentals get worse, maybe revenues dropping. Maybe their products are just not becoming desirable. And those stocks still are trading really high. Maybe a lot of investors find them popular. Those are the types of stocks that I often consider shorting, which is to set up a position where you sell the shares of a particular stock through your broker, and then you wait for the stock price to go down. If it goes down, you make money. If it goes up, you lose money. So it's the opposite to buying a stock. And I'll go through the process of setting up a short position later. Before I jump into looking at short selling closely, let me share a new partnership I have with Moomoo. Moomoo is sponsoring my channel, and I appreciate that. They're offering subscribers an offer to earn 8.1% on cash balances if you open up an account. That's a really good rate for 3 months. And then after that, it turns to 5.1%. They also will give you 15 free shares of stock if you open an account with $1,000 or more. And each share could be worth $2, it could be worth $2,000. So it's interesting. I've set up my account and I'm still waiting for those 15 shares. I'm curious to see how much they're going to be worth. If it's the right type of broker that you want to open up an account with, I'd appreciate you using the link that I'm providing in the description of this video. Short selling often creates a lot of attention, and movies have been written about short selling. The Big Short, most recently, was Michael Burry's shorting of the subprime market, and it really worked out for him. The thing I'll point out is mortgages tend to be really stable. So he shorted a very stable investment and he made a lot of money. The other one I'll point out is George Soros. It's been a while since he did it, but he shorted the British pound, another very stable investment. He made about $1 billion on that short trade. Both conditions they felt were really good for shorting. And in both positions, they were really the only ones thinking along those lines. It really proved to be a winning recipe for them. Another short that is very recent is a whole GameStop short squeeze. And a couple of movies have been made about that already. Roaring Kitty has made an appearance again, and that stock's off and flying again. And the short squeeze did happen, and it became really risky for short sellers. And in the short term, short sellers lost a lot of money. Melvin Capital, I don't know if they operate still, but they lost hundreds of millions of dollars. It was a big loss for them. The thing I'll point out is that the smaller stocks and the stocks that are priced really low, that have a lot of short sellers in them, a lot of attention, those are the ones that I sense are the riskiest to a short seller. The reason being is that if you have a very low price on the stock and it's a popular title like a GameStop, I think retail investors and other investors can think about a short squeeze. And if they squeeze the shorts, it could really cost short sellers a lot of money. So the three examples I showed is examples where Michael Burry somewhat snuck up on the market and shorted the subprime mortgage market without many people thinking that at all. I think people didn't pay attention and he just let the markets do what they did and he made a lot of money. The same thing with George Soros. He shorted the British pound and people thought he was crazy. But once it started to work, he made a lot of money. In the case of GameStop, in the short term, short sellers lost a lot of money. But I'll point out over the long haul, the short sellers were right. And I think most people, rational minds, would agree that the GameStop business is really not a part of the future. It's really part of the past. And that stock price is really artificially too high. But overall, short sellers made money on GameStop over the long haul. I'm recording this video on June 5th, 2024. And the market conditions that I'm observing is the market's been up for about a year and a half. And if you look at the S&P, the stocks are about 50% higher than they were about 18 months ago. And in some sectors, in some industries, the increases in stock prices have just been incredible. If you look at semiconductor and other technology stocks, it's pretty incredible. How about utilities? Boring utility companies have doubled in stock price in less than a year. Incredible. Well, Incredible means it's really hard to understand. It's really hard to imagine. And I think there's an opportunity there to look at some of those companies and establish a long-term short position. Just a quick reminder, I'm a individual value investor and I am not recommending that you short any stock. I'm not recommending you buy or sell any stock I ever talk about. I'm not providing any financial advice. I'm sharing with you my experience as an individual value investor and my experience in analyzing and setting up short sales on stocks. Let me look at an individual company as an example, Tesla. Tesla year to date is down 29%. I've done two videos on Tesla in the last year. I created one video 9 months ago, and I created a video in March of 2024. On both occasions, I felt that Tesla was highly overpriced, and I shared that on the videos. If I had shorted Tesla on January 1st, I would have made 29% return year to date. In a little over 5 months, that's a great return on a stock that I felt was overpriced. That's an example of a stock that I'm finding that is overpriced and really an idea to short. Not a lot of people are shorting Tesla. I think it's a really popular stock. And when the CEO talks, the stock tends to jump up. But what weighs down on the stock price is the true fundamentals of the business. And if you look at their car business, it's beginning to suffer. It has a lot of competition. Cash flows have really gone down. Tesla has become a car company. A lot of people felt they were a technology company, but they're now beginning to see the headaches and the limitations of the car industry. Other rival car companies have come out with great EVs. The Chinese are coming out with great EVs at a really low price. The competition is fierce, and we'll see if Tesla can operate well in the new environment they find themselves in. Setting up a short position, you would work with your broker. In my case, I've been with my broker for some time. And at this time, since I think the market is rather expensive, I've really built up a good cash balance. And I say that because when you set up a short sale, you set it up in a margin account. You have to set up margin in your account and you actually execute using your margin account. Once you set up a margin account, if you have the cash balance to cover all the shares that you're shorting at the stock price that they're trading at, you don't have to pay any interest. That's one thing that I cleared up with my broker. And that might be an area that there's a misconception on. If you don't have the cash, you would have to pay interest because you're borrowing the money. But if you have the cash in your balance, I think you would avoid paying interest rates. But check with your broker for specifics on how they operate. That's how my broker operates. So I've set up short sales on two companies, and so far, so good. I'm in the green on both, and I plan to set up a couple of more. I'm a believer that through diversification, I could lower my risk and I think overall have long term success. So I intend on having maybe about 5 short positions, and I'm not going to be in a hurry to set them up. I'm going to be finding and selecting companies carefully, then managing those investments very closely. Now, the upside risk of a short sale is that a stock price goes up. In the example that I talked about earlier, GameStop really went up, it went parabolic, and that really caused a lot of losses for the short sellers. So, what I do to limit risk is I put a stop loss order on my short sales. And that way, if a stock begins to rise and rises very quickly, I just sell out of the position. I am not selecting stocks that are going to follow a very erratic forward price. Instead, I'm trying to select stocks that I feel are probably slower moving and I could expect a particular price action on. A little bit like George Soros or Michael Burry. They selected two investments that were rather boring, if you ask me. Currencies are really boring. I rarely ever look at them. And then the mortgage business is really boring. I rarely look at that either. But both of them made a lot of money shorting a very stable investment. And that's a pattern that I'd like to follow is go to investments that I really understand, that feel I could have a good accuracy in predicting what's going to happen. I'm never going to get everything right. Probably going to be wrong a couple of times, but I have to operate in an area where I feel I'm going to have a good success rate overall. So short selling is one more tool in the investment toolbox to help an investor make money. And as I mentioned, I believe that the stock market is priced rather high, and finding stocks that are discounted continues to become a little harder as we go month to month, week to week. But finding stocks that I feel are way overpriced is becoming more typical now. I'm finding companies that I think there's just no way they're going to have this stock price in a year or maybe two. So I'm going to execute short sales and I believe increase my return overall. Now, I'd like to remind everybody watching that short sales are incredibly risky and you should really operate carefully and limit the amount you're investing to an amount that you can take a complete loss and it really wouldn't affect your overall portfolio value and or your lifestyle. If you're a big gambler, I can understand that. I'm not. I'd like to increase my return, but I also want to manage my portfolio risk. I'm only putting a fraction of my portfolio into short sales so I can increase my performance. Most importantly, I like to really exercise the whole art of investing, which is finding companies that I really like, valuing those companies, and trying to determine what those companies are worth. And when I find a company that I believe is worth half of their current stock price or less than that, I'd like to exercise the execution of that conclusion and seeing how right or wrong I was. There's a lot of learning that I could receive out of that event. And that to me is also a big return on investment. I hope you found my video interesting and I really appreciate you watching.